The following content is meant purely for educational and informational purposes and should not be relied upon as financial, investment, legal, tax, or any other professional advice. This is the Fundamentals Podcast, where we demystify crypto and help you navigate this ever-evolving internet-native economy. In this episode, I'm joined by Pablo, the co-founder of agEUR Protocol, a decentralized euro stablecoin protocol. To cover the basics, in order for an on-chain economy to grow, users need access to stable crypto assets. Many use cases are currently out of reach for crypto, since cryptocurrencies like Bitcoin and Ether are too volatile for users who wish to engage in trade through on-chain payments. Stablecoin issuers bring down the cost to access tokenized dollars, euros, or other fiat currencies to one function call. Once a user has deposited collateral into a stablecoin protocol, they're able to borrow stablecoins minted by that protocol. Compared to lending protocols, where other users are the source of funds for borrowers, here the stablecoin issuer is the counterparty. agEUR is a decentralized, capital-efficient, and over-collateralized stablecoin protocol that was launched in November 2021. Their stablecoin, agEURO, is currently the most liquid euro stablecoin on the market. In this episode with Pablo, we discuss what agEUR is, how it works, its core value proposition, and position within the market. We also get an overview of agEUR's business model, their smart contract infrastructure, how they ensure robust security, the team behind the project, the venture case for both agEUR and euro stablecoins in general, their plans for the future, and more. Hey Pablo, welcome to the Fundamentals Podcast. It's great to have you on.
Hello, Scary. Thanks for having me and glad to participate today.
Awesome. Yeah, I've been looking forward to it. Now, before we dive into the details behind agEUR, it would be great if you can give us a quick introduction to the protocol for anyone not yet familiar.
Yeah, sure. agEUR, it's a decentralized stablecoin protocol, a bit like Maker. You could see it that way if you want to really to understand the gist of it. But agEUR tries to be a bit more complex than Maker. So we are doing at the moment only one stablecoin, agEURO. agEURO is a euro stablecoin. It is a stablecoin that is over-collateralized in the sense that there are always more collateral assets behind the stablecoin than stablecoins actually in circulation. It is a system, agEUR, that relies on several different modules. So the stablecoin can be issued in several different ways. And today, agEURO, which is agEUR's main product, is live on different chains. It is the most traded euro stablecoin in the market. So whenever you are trading a euro stablecoin in the market, in decentralized exchanges, 6 times out of 10, you are trading agEURO. And it's a stablecoin that is live on multiple different chains, on Ethereum, Polygon, Avalanche, Optimism, Arbitrum, BNB Smart Chain, like most EVM chains you can think of, agEURO is there.
Awesome, thank you. And like you mentioned, it's a euro stablecoin, which are actually a somewhat recent addition to the market if we think of where stablecoins started off with like a very USD focus. So could you describe the core problem that agEUR solves? So kind of in other words, the purpose of your being?
There are two purposes of our being. The first one, it's the more short-sighted purpose of what we're building. We're building tools for people to enjoy DeFi without having to worry about the exchange risk. You know, much of DeFi is centered around the dollar, and we wanted to build the elements and the financial primitives for people to interact with DeFi without having to say, oh, I'm dealing with dollars, but my home currency is the Swiss franc or the euro, and I need to find some hedging mechanism. So that's the first purpose. And the second purpose, it's more like a global purpose. We're building financial primitives for DeFi to become the de facto standard of finance. We believe that DeFi has everything in it to live in parallel or potentially to replace many elements that exist in traditional finance. And so we are building the products to facilitate and to accompany this transition to a more efficient and inclusive financial ecosystem.
Got it. Now, speaking a bit more about your product suite, you allow users to mint agEURO. You also have borrow, trade, and earn functionality. So can you speak about the whole suite in a bit more detail?
So maybe I'll start with what is most common. It's the borrowing/CDP infrastructure of the protocol. So you can put a collateral asset, and there are various collateral assets accepted by agEUR. You can think of it as a multi-collateral equity. And these collateral assets enable you to borrow agEURO against it. So it's a classical CDP infrastructure like Fraxlend, just like when you borrow on Aave. We've improved over the state of the art when launching this borrowing module to make the system truly more efficient and more borrower-friendly than existing models like the Maker CDP model. For instance, when you get liquidated with agEUR, the discount you are paying to the liquidator, like the revenue the liquidator makes, is minimal because liquidations, there is not a fixed liquidation discount. It is computed as per a Dutch auction. And like the more competitive liquidations are, the less you are losing as a borrower. And also the cost of borrowing, so far it's really small. It's between 0.5 to 2% a year. There is no fixed borrowing fee. There is no repayment fee. So this is for the CDP CDP infrastructure. This infrastructure lives in many different places on chain. The protocol also has a form of price stability module. I call it a form of price stability module because it's an improved version of the price stability module you can think of. It's a system that enables agEURO to be backed by different types of euro stablecoins or euro yield assets, and that guarantees that like agEURO can be minted with a good UX at a 1-1 rate against these euro stablecoins. It can be burnt at a 1-1 rate against the other stablecoins in the backing. But contrarily to other price stability modules, this system that we call the transmuter comes with guarantees on the fact that if one of the assets depegs, well, agEURO can still survive. If one of the assets depegs, all the reserves behind agEURO through this mechanism, through this transmuter mechanism, are not converted into the weakest asset. You know, when you are dealing with a Uniswap pool, if you have in the pool an asset that is going to lose in value, well, the pool is going to be made up only of this weak asset. The transmuter system guarantees that if one of the assets in the backing fails, then agEURO will still be backed by the other safe assets. So, you know, you can see agEURO as a basket of different stablecoins that is safer than any of the assets individually in the backing. And also the system is autonomous, fully predictable, and there is no need for governance to trigger like the circuit breakers in case of black swan events. So this system would have been perfectly able to resist the USDC depeg, for instance. And then, so these are the two main modules, the borrowing module, the transmuter system, which is a price stability module under story. And then the protocol is also engaged into what we call direct deposit modules or algorithmic market operations, to call Frax terminology. So it's very similar to what the most stablecoin, the most advanced stablecoin systems you can think of. Like all the founding layers are here, except that what we did when designing the systems, we try to go further and to iterate upon what already existed in the market to issue decentralized stablecoins in a safe and resilient way.
I love the emphasis on both capital efficiency and security. Now, moving on to the technicalities of how you make that happen, can you speak a bit about how Angle works under the hood? So what are your most relevant and important smart contracts and what do they do?
So the cool thing with the CDP is that it's only one smart contract in the end. It's a smart contract that we call a vault manager contract. It's like an isolated lending pair. You put a collateral and then you can borrow agEURO, like a Kashi smart contract if you look into Sushi. And then on top of each vault manager contract, there is a treasury contract that grants the minting rights to all vault manager contracts and that unifies the accounting for the borrowing module so that we have a proper system to deal with gains and losses, and that like pulls everything together into one contract. So the system, it's adding one new collateral for Angle is pretty straightforward. It's just one new contract that needs to be deployed. Another, you need to deploy also an Oracle contract on top. And then governance need to plug this new Vault Manager contract to the Treasury contract so that it is connected to the rest of the system. This is for the borrowing module. These contracts have, of course, been audited and they've been used in production for more than a year now without any issue, without any one notifying a bug on Immunify because we have several bug bounties. The transmuter system, the price stability module system, relies also on a single contract. It's not a single contract per collateral, it's a single contract as a whole that uses a diamond proxy pattern. So with several facets that corresponds to the different types of features that this transmuter system enables. So it's only one single contract, audited as well, that for which facets can be upgraded, and that handles the accounting, that handles minting, that handles burning, that handles redeeming against the fair value of the assets in circulation. And the thing is, with a small amount of contracts, we can let the system to be super expressive. Like the borrowing system, for instance, if you plug other contracts on it, you can use it as a way to get leverage. You can put a collateral, borrow agEURO, and then swap this agEURO into more of the collateral. And all of this has been designed to be super borrower friendly. Like you don't need to do a flash loan. Let's say I only have like 50 of collateral and I don't want to put 50, borrow 30, swap the 30 into 50, and then end up with 80 of collateral to borrow more of stablecoins. All of this has been designed to be super borrower friendly, and so that you can get to, in one transaction, as if in a flash loan, you can, get the stablecoins, add the collateral, and then the system will do a health check at the end. So it's built for leverage, it's built for developers, and yeah, because we are developers ourselves, and we know what kind of systems we like to integrate.
Yeah, that's great. And that was also a very easy to digest overview. Thank you. And as you're live on several chains, what does your multi-chain setup look like?
We assume that all bridges are going to get hacked at some point. And so we're super strict in terms of security and the safety of our cross-chain system. But we also don't want to favor one bridge with respect to another. And so on each chain, there is a canonical version of agEURO with several whitelisted bridge tokens that can allow to mint at a 1-1 rate the canonical agEURO. So for instance, on Optimism, you have layer 0 agEURO, which corresponds to agEURO bridge through layer 0. And you have canonical canonical agEURO. And the layer 0 agEURO can be used to mint at a 1-1 rate the canonical agEURO. And any whitelisted, so any bridge can be whitelisted and added into the system. What we add on top is for each bridge token, like layer 0 agEURO, we implement hourly and global limits so that if layer 0 was to be hacked, the protocol would not lose more than what can be bridged during an hour from one chain to another. And so far, layer 0 is the solution that is incorporated in the front end we're developing with Angle Labs, but any bridge solution can be potentially added into the system. So it's bridge agnostic, and it also has bridge specific limits to prepare for the case where a bridge gets hacked, and with the goal of improving both UX and safety, and the safety for the protocol of the bridge system we have.
Now, and then if we take a high-level view into the broader stablecoin market, how would you describe the current state of that market sector and then also your position within it?
So maybe I try to have even a more focused answer to your question, and focus on the Euro stablecoin market as a whole. Like we are not doing anything for like in the USD stablecoin market. Most interfaces dealing with Angle are not available in the US. So our view is that there is an imbalance. You look at the size of the euro, the total euro with respect to the dollar, and then you look at, if you compare it to the size of the Euro stablecoins with respect to the USD stablecoins, there is an imbalance. Like the disproportion is not the same. But at the same time, in DeFi and in crypto in general, it's very often first arrived, first served. Like Bitcoin was the first crypto, and it's still the most widely used today. USDT was the first USD stablecoin. It's still the most widely used today, even though there are other competitors which are shinier, which are more transparent, and people still don't use them. The same goes for Euro stablecoins. Like at first, people got used to USD stablecoins, and then Euro stablecoins are still lagging behind, even though many people should use financially Euro stablecoins, because they would be better off doing this. And so our view on the market is that we need to be better than just saying, look, there is an imbalance, and we want to restore this imbalance will naturally restore itself. We need to build better Euro products to drive the growth for all Euro stablecoins. Like the size of the market of the Euro stablecoin market is 150 million approximately, and we need a better UX, we need more transparency, and we need actually financial incentives. And I'm not talking about like token inflation, but about actual products that put people better off using it in DeFi than using TradFi. Like we need these products for people to move to the Euro stablecoin market. There are two essential use cases to stablecoins, a payment use case and a yield use case. And on our end, we are very much focused on the yield use case. And that's why we try to target with agEURO. We believe that stablecoins in DeFi can be a tool and an instrument to earn a yield and to earn a revenue on your assets. And this is what we're going all after. And we believe that centralized stablecoins, they should and they are naturally going towards the payment use case, like remittances being used more and more for cross-border payments. This is not where we are investing a lot of time into.
Yeah, and within the Euro stablecoin market, just to kind of emphasize what we already covered in the previous questions, how would you crystallize your unique selling proposition?
The unique selling proposition is that, a stablecoin, there is the technical elements behind it. I've already spoken about it. I won't delve more into it. And I believe in terms of decentralized stablecoins, we have the most robust, resilient, and safe infrastructure. But a stablecoin, the technical elements do not do everything. It's a question of network effects. Like why it's easy to create a stablecoin. Anyone can create a stablecoin, but it's like a standard. It only has value if other people use it. agEURO, it's the most widely connected Euro stablecoin out there. Like many Euro stablecoin projects that are launching themselves, they are creating curve pools without even contacting us or any other Angle core contributor with agEURO, because by having deep liquidity with agEURO, they are having a pathway towards many DeFi integrations. And agEURO right now, it's the hub. If you want to trade Forex, well, agEURO is the most liquid stablecoin with other USD stablecoins. So if you want to do huge trades, directional trades, like switch from the dollar to the euro, then you are doing it with agEURO. But if you want to own euros and play around with DeFi, well, you have to use agEURO because we are the most connected.
And like you said, anyone can launch a stablecoin, but not anyone can make it work. So can you walk me through what the team building Angle looks like?
We are a team of engineers mostly. And we studied in the US. Like personally, I went to Stanford University, and we're 3 in the team that went there. We have a focus on efficiency as well. So I am from Angle Labs, which is one company contributing to Angle, but there are also other companies contributing to the protocol. And the ethos is around iteration. We are an underdog. We still have a lot to prove, even though we believe that what we're building is adding a lot of value, but we're taking nothing for granted. So we are super hungry. We like to ship a lot, and we like to design new systems. But our number one, focus whenever we're doing things, we prefer to have slower iteration cycle, but higher like and safer products than just push things that may be unsafe. And it's always the balance, like for any project. Do I want to do more products or do I want to do safer products? And we tend to put more bias towards making safer products that do not get hacked.
Now, I gotta say, the way that you speak about that, and especially how you emphasize the importance of security, reminds me a lot about the discussions I've had with Morpho's team. Don't know if you're sitting in the same office or something, but this seems to be like the French builder's view into building solid and secure crypto products. I love it.
Yeah, of course, I know them personally. But, in the end, DeFi, if you look at the risk reward, so far it's been mostly negative. If you look into all the hacks, like if I'm an investor in DeFi, all the yield and the money that has been made by people in DeFi, I think it is barely superior, if not inferior, to everything that has been lost through hack. So we need to change the image. We need to build safer building blocks if we want it to grow. Because if there are still hacks occurring on a recurring basis, then there is no world where DeFi actually takes over and where we actually get into this safer financial ecosystem.
Well said. That 100% agree with you on that. Next, I want to move on to financials and start with your business model so we understand how value flows through the protocol and how you capture it as well.
So the protocol was super profitable, has been super profitable since the last year and a half. It accumulated approximately $7.5 million of surplus. So this money was made through systems that are not still live. Some have been wound down because we are all about iteration as well. The protocol is making a revenue from its borrowing module because it is taking a borrowing like an interest rate. When you are borrowing at like 2%, well, these 2% are going into the pockets of the protocol. It is making money from its transmitter system, from transaction fees, from people minting and burning. And it is also making money through its algorithmic market operations. Even though these are smaller in size than what they used to be like a couple of months ago, the protocol is making revenue. So it makes 3 different revenue streams. And right now, the goal is the protocol has been super profitable. The goal, and we are working towards launching savings contract to pay a portion of the revenue the protocol is making to agEURO holders to incentivize them to own agEURO, to later grow the size of the protocol, to grow the revenue, and sort of kickstart a flywheel effect at the protocol level. This is not live yet, and so far all the borrowing interest are for the protocol, but the intent is to have a portion routed to agEURO, and like some fees and some revenue was also distributed in the past to VE-Angle holders, so holders of the token. These have received more than 1.5 million in rewards, and I'm talking about actual rewards, like not token rewards, USDC rewards from the protocol revenue over the past year. This has slowed down a bit recently, but this is down the line our one and only incentive, like growing the financial value of the Angle token. And we're not going after the shiny stuff. We don't like scammy marketing. We prefer to focus on fundamentals, and we believe that our fundamental and the product we're doing is agEURO. So our bet is that the more agEURO in circulation and the better products around agEURO you have, the higher the value of Angle and so of the Angle token that will be as a whole.
Focus on fundamentals is music to my ears. I'm glad to hear that. And also just have to say, very impressive the level of profitability that you've achieved in such a short time span. So now you mentioned the Angle token and your purpose is to kind of maximize the value of that through everything that you do. Can you speak about what its current purpose is and any plans for the future?
Its current purpose is, like most governance tokens, it's to govern the protocol. So Angle is a decentralized stablecoin protocol. Like everything is voted by not Angle token holders, but by VE-Angle token holders who can take decisions on what to do with the protocol, which collateral asset to add, which parameter to set. This drives value because like the protocol is controlling at the moment it's more than 30 million in TVL. Most of it, like 7.5 million of it being pure past profits from the protocol. So this has value. And then, there is like the thing where if the protocol makes a revenue, in the end, this revenue should be distributed or should benefit at some point to Angle token holder in some way. Some revenue were already, as I said, distributed to Angle token holders. My guess is that it should still be the case for the time being and in the future.
And then a pretty specific question about venture funding, because you have been backed by a pretty impressive group of investors. So I was wondering if you could share what the venture case for Angle is and how you've pitched it.
The way I pitched the venture case, I was just explaining back in the days, but it's still the same, explaining the imbalance between USD stablecoin and Euro stablecoins, and showing that it was not normal that there was no big Euro actor like Maker or like Circle trying to build the products for the European market. So this is the big venture case. But right now, if I had to raise funds again, because Angle Labs is a super well-capitalized company, like we had raised the $5 million round, we still have more than 3.5 million at the bank, and so more than 2 years runway, and the protocol has its profit, and Angle Labs could pose proposals to finance itself through a portion of the profits the protocol made. So protocol is well capitalized. We don't need to raise at the moment. But if I had to raise again, I was saying, look, we have built in a record amount of time all the technical infrastructure of all the major decentralized stablecoin protocols. Like everything that Maker is doing, we have it as well for Angle. And we have speed of execution and a quality of execution in the sense that we never got hacked. People can reproach us our lack of marketing and this kind of element, but we have a quality of execution that uniquely position ourselves for the goal we're setting for the company, that is build the financial primitives for people to actually use DeFi. So investing on Angle is like investing on the euro and DeFi. Okay, fine. We are so far the leaders in the aspect, but it's also investing in the future of DeFi because this is what we're building for. We believe in DeFi super apps, and we believe in more composable and more efficient products, like better financial primitives. And this is what we're focused on building with Angle.
Awesome. And how well capitalized you are at the moment is also, I think that's so insightful context. So thank you for sharing that. And then also like how you currently view the market potential and what you're building. That's great info. Now, thinking from the perspective of your kind of day-to-day operations for a second here, what are the main drivers or challenges related to your growth right now?
I still think, and it's the case for any stablecoin protocol, that we are in the chicken and egg problem. Like no one will use the stablecoin unless other people use it, but people will not use it if other people do not already use it. And this is the main challenge for all Euro stablecoin. And for us, the way we think about changing it is through the better products. I was mentioning earlier the Euro savings product we want to build. If we are able to kickstart a savings product that pays the risk-free euro yield to agEURO holders in a fully transparent, fully composable, fully flexible manner, meaning that you can go in and go out whenever you want, kind of a risk-free euro rate in DeFi that is composable, like that can be integrated in other protocols, that can be integrated in Aave, and that people can use without fearing any hack or without fearing any threat on the economic sustainability of Angle, then I don't think we will be facing growth issues. So there is like getting people to integrate agEURO. And our main challenge is really to reassure people on the safety and on the infrastructure we're building so that they are confident putting their money in it and actually using it. There are some protocols which are promising like high yields, some centralized black boxes. And I'm not dealing with it even when I know the people, because I need to trust them more than I trust my family when I'm entrusting them with my money. And that's the same we must do with Angle. We need to build trust. We need to reinforce this trust. And this goes with transparency. This goes with super high commitment on security and this kind of stuff. And that's how I believe we're going to overcome our growth challenge. And of course, the better products, the savings product being one of them.
Got it. And as you've emphasized security so much here, can you share what your smart contract development and auditing processes look like? So how do you get from initial development to deployment?
Actually, like development is the fastest step when you're developing smart contracts. You need to build a system before developing the smart contracts. If the smart contracts is based on math, then you need to have written the math. You need to have written the demonstrations. For instance, in Angle borrowing module, the liquidations rely on somehow complex math, even though like we've all done, I guess, more complex stuff. But these are math that involve differential equations at some point. You need to solve the math. Then you need to implement like what's written in your paper, the smart contract. And then you need to iterate, you need to test the contracts and improve the system. So right now we are only using the like Foundry framework, and we are doing some fuzzing, some invariant testing. And when we fuzz, when you fuzz, usually it's the last step. Like first you do some unit tests, and then you are fuzzing the contracts. What we're doing now is, we are doing some unit tests and then generalizing this test into fuzzing and then into invariant testing to make sure that our contracts are working as they should be working. And once we have this confidence, usually when we develop the contracts in Angle team, there are some people coding and some reviewing, and then we have other developers which are all reviewing the contract. So we are doing an internal audit within the system. And then once this is good, if there are also some people who in our like advisors who want to take a look at the contracts, we are sending it to them. And then once we've got all these confirmations, we're sending it to the audit. And we like to use, we like Code Arena for this. So our latest audit for the transmitter is with Code Arena.
Okay, got it. And where are you on the spectrum of fully immutable to mutable contracts?
We use diamond proxies, so we are more towards mutable contracts.
All right. Got it. And then a final question just to wrap this session up. So much insightful stuff that you've already shared, but what's next for Angle? Is there anything else you can share from your mid to long-term roadmap?
So there is this work on increasing the transparency on the stablecoin. There is this work on putting up a euro savings contract that is going to pay the risk-free yield of the market to agEURO stablecoin holders. And there is this work to increase the ties between agEUR and real-world assets. Right now, agEUR supports through its borrowing module several types of tokenized ETF that invest in US Treasury bills. We want to go in this direction. Down the road, I want any company which has an account receivable to be able to borrow agEURO with their account receivables because they cannot do this with their bank. And once we are able to do this, and once we are able to pay all agEURO holders with the risk-free yield of the market, then I believe we would have gotten to somewhere that starts to be interesting. But till then, there is a lot of work ahead, and we will stay heads down building.
Thank you so much, Pablo, for this overview of Angle. I really appreciate you taking time to do this, and I hope we can do it again and dive into the details behind some more specific topics in the future.
Thank you so much, Oscar. It was a pleasure to be here.